Question three. The question three reads, Lutendo Manufacturers Limited provided the following information for the financial year ended 20th February 2019. The company is busy doing outfostering work on launch suits for hotels, and the launch suits consists of a three-seater and a five-seater suite. So, raw material costs, of course, we have got material, 100 rands, 100 rands per meter, then we've got sponge, 25 rand per kg. We're given direct labor is 25 rand per hour. Then the stock costs are given uh, on at this table. Then we have a breakdown on finished goods produced per unit, which is as follows. Then, of course, we've got three-seater column, five-seater column. We're given also factor overhead expenses. So the question requires us to draft each of the following budgets. Of course, we've got the sales budget, a production budget, a raw materials budget for sponge only, and then we've got direct labor budget, manufacturing overheads budget. So we're going to start with the sales budget. So for all the preparation of the sales budget, you are supposed to start with the expected sales in units, and then you put down the sale price per unit, you multiply to get the total sales. So if you check in terms of our other section, this is going to be our sales budget. So we are going to start with the expected sales in units. Then we check the expected sales in units of the three-seater and five-seater. So if you go back, you see that we check now where do we have the expected sales in units. We'll try to go through the information that we have. So we have 600 units, and we have also for five-seater 500 units. So these are the expected sales, three-seater 600 units, and then five-seater we've got 500 units. So these are the expected sales. So we go and enter those ones whereby we have 600 for three-seater, then for five-seater is 500. Then from there we put down the selling price per unit. Of course, if you refer back, you'll see that the sale price per unit you're given here is 2,500 for three-seater, then we've got 3,500 for a five-seater. So those are the sale price per unit. So with that now, we are supposed to uh, multiply the two to get the total sales. So we say 600 times 2,500, then you get the total sales. And then if you multiply the two, you get 1,500,000. Then on a five-seater, 500 times 3,500 rands, and then we get a product of 1,750,000. So this is what we have basically on this part. And then I'll move on to the production budget, which is the next one. So on the production budget, we also have the three-seater column and five-seater column. Of course, we're going to start with the expected sales in units. We start again with expected sales in units. For expected sales in units, remember we identified that as uh, 600 units for three-seater, 500 units for five-seater. Then we are supposed to add desired closing stock. So by adding desired closing stock, we check in terms of the units of desired closing stock, whereby closing stock we have it here, whereby we have got 3-seater, 300 units, and a 5-seater, 300 units again. So we enter them as 300, 300. So after adding your desired closing stock, you get the total stock requirements. So this part, you're going to get the total stock requirements. So basically, you're saying 600 plus 300, and then you get your 900. Then 500 plus 300, then you get your 800. Then from there, you are supposed to subtract opening stock. So you say less less your opening stock. So after subtracting your opening stock, then you are supposed to get your number of units to be produced. So opening stock, we refer back to see what we have. We have the opening stock of this point, whereby we have 250 units for 3-seater, 160 units for 5-seater. So that's exactly as we have, whereby we have 250. So we are saying less at this point, so it means we are subtracting. And then we have got on the other part of our 5-seater, we have 160. So we subtract again. So from there, you are supposed to get now your final figure, which is the number of units to be produced. So we can underline, whereby we now get the number of units to be produced. Number of units to be produced, we have now 900 minus 250. You get your answer is 650. 650, and then we've got 800 minus 160. You get your answer is 640. So that's what we have on production budget. So the final figure that we have on production budget is the number of units to be produced. So we can try to. So with that, we'll move on to the next budget, which is the raw materials budget. So in the raw materials budget, what we are supposed to start with is the production requirements. So we are going to start with production requirements. So for the production requirements, these are the ones that we've just calculated. Number of units to be produced are the production requirements, whereby we've got 650 and 640. So on the raw materials budget, we are only supposed to have one column, no two columns, since we are going to combine them. So we can remove the other column. So we are now saying the figures that we got for production requirements. We've got 650 for 3-seater, 640 for 5-seater. So add the two. We're saying 650 plus 640. So if we add the two, you're supposed to get your answer is 1,290. Then from there, you put now the material needed per unit. material needed per unit, which we are going to get in the question. Now we check according to what we have. So we're given the breakdown on finished goods produced per unit. So remember, if you refer back, we have our raw materials budget for the sponge. So we are concerned about where we have the sponge, of which sponge is here. And the material that is needed is 40 kg. We can see that 40 kg, 40 kg. So we put our 40 kg. Then from there, we get our production needs. So our production needs, we are going to multiply the production requirement plus material needed per unit. Then we get your production needs. So here we have got production needs. So basically, we're saying 1,290 plus 40 kg. Then we get 51,600 kgs. So this is what we have in particular. So with that, after getting your production needs, you add desired closing stock. So our closing stock, I will check again what do we have. What do we have in terms of our closing stock, and we are looking for sponge only. Remember, this is the raw materials budget for sponge. So sponge we are having here. So desired closing stock, we have got 8,500 kg. So we put our 8,500 kg. And then when we add, we're going to get the total needs. You get the total needs. So 51,600 plus 8,500, and you get a 60,100 kgs. So after getting your total needs, you less your opening stock. So for opening stock, we are using opening stock in this point, which is 13 kg for sponge, 13,000 kgs for sponge. So we put it as such 13,000. 18,000 kg. So basically we are saying 60,100 minus 13,000 kgs. We are going to get your answer is 47,100. 47,100 kgs. And the answer that we get is 47,100 kg to be materials to be purchased. So with that now, we are supposed to look for the cost per material. The cost per material. So the cost for per material, if you check, you'll see that we are given for sponge, we have got 100 rands per kg, and then it's also 100 rands per kg for the 5-seater. So we have 100 rands. So that we are supposed to multiply the two to get the value of material to be purchased. It is going to be the last part value. of material to be purchased, which you say now 47,100 kgs times 100, and you get your 4,710,000 kgs. So basically, this is what we have on this part. So this becomes the last part that we have the raw materials budget for the sponge. So from there we go to the direct labor budget. So this is now the direct labor budget. We also have a column for 3-seater and 5-seater. So in direct labor budget, we're supposed to start with the units to be produced. So we are supposed to start with the units to be produced. So we refer back to see what units do we have that has to be produced. Remember, we did calculate them, and we got 650, and for 3-seater, 640 for 640 for the 5-seater. So we can refer back to where we calculated them. 650 and 640. Well, that is on the production budget. So those are the units to produce that we're going to start with in the direct labor budget. So we're going to put them in such whereby we have 650 and 640. Then after units to be produced, we are supposed to have direct labor time per unit. Direct labor time per unit. So we refer back again to see what is direct labor time per unit. Of course, for 3-seater, direct labor is here. For 3-seater, we've got 20 hours that are needed per unit. And then for 5-seater, we've got 35 hours. So we have 20 hours for 3-seater, then 35 hours for 5-seater. So with that now, you get your total hours by multiplying the two. So here, you're supposed to get your total. So how do you get your total hours? You now say 650 times 20. And here you get your 13,000 hours. Paper 5-seater, 640 times 35. You get your 22,400 hours. And then you're supposed to have your cost per labor hour. Cost per labor hour, whereby we are saying the cost per labor hour, we refer back to see what do we have in terms of cost per labor hour. We've got 95 year labor hour, 95 rand per hour for 3-seater. Then for 5-seater also it's 95 rand per hour. So you put 95, 95. And then for cost per labor hour, you get now the total direct labor cost. So you can just see that the total will be the product, total direct labor cost. So we are now saying 13,000 for the 3-seater, 13,000 hours times 95 rand. And then you get your 1,235,000 rands. Then for 5-seater, 22,400 hours times 95 rand, you get your answer is 2,128,000. So that's becomes the final part. So this is what we have, guys, on that part. Then we still have the last one, which is the manufacturing overheads. budget. So on manufacturing overheads budget, you are having columns for 3-seater, 5-seater, and then the total column. So it starts with number of units to be produced. Number of units to be produced. Remember, we did refer to this several times. So 3-seater, remember, is 650. Now 5-seater is 640. So add the two to get the total. You get 1,290. And then after number of units to be produced, this is the number of units to be produced. Then we go to variable cost per unit. Variable cost per unit. We check what we have in terms of variable cost per unit. According to information that we have. So we need to try to refer to the information that we have so that we find that a variable cost per unit. So we have variable cost per unit at this point, whereby of course it's variable cost per unit 650. So it's going to apply for both 3-seater and 5-seater. So we refer it as 650. And then also other 5-seater 650. Then for the total, it remains 650 since it applies both. So we now say we now go to total variable cost. Total variable cost, whereby we are now multiplying 650 times 650 for the 3-seater, and then we get the total variable cost. So we multiply with other 3-seater, you get your answer as 10,000. 725 rands. So this is what we have, and then we multiply for 5-seater, you're supposed to get your 10,560. So we can just try to verify that calculation. Whereby you can calculate by saying our under 3-seater 650, and then you multiply by 650. So that's what we have. Then we add the two. If you add the two, 10,725 plus 10,560, you're supposed to get 21,000. 21,285. In such a way that if you say also 1,290 times 1,650, you are supposed to get this figure again. So this is what we have. And then from there, of course, we need to extend our lines because we have got a few items that we also need to enter. So after that, what you're supposed to do is to add fixed overhead. So you say plus fixed overheads. So we're going to check the fixed overheads for 3-seater and 5-seater, then we add to get the total. So let's try to see what are the fixed overheads. According to information that we have. So we can just try to see. Yeah, if we check there, in terms of fixed overheads, we are having fixed overheads in this part where we put factory overheads expenses. So our fixed overheads, we have 350,000 rands. So that's the one that we are supposed to add. So we have 350,000. So it means on that one, we are supposed to now add it so that we get the final figure. And the final figure becomes the total manufacturing overhead. So if we add 21,285 plus 350,000, you get your 371,285. That is this figure plus this figure. Then in terms of the description of that figure, we said it's going to be our total manufacturing overhead. So basically, this is what we have according to this question. Yes, we get the total manufacturing overheads for the manufacturing overheads budget. So